The topic that we are going to discuss today is bank reconciliation statement. Have you seen the message in the group?
Yes, sir.
Okay. In one of our earlier classes, I started the presentation, but we could not complete this topic, this bank reconciliation statement. And this is an important topic. And the questions are frequently asked in your examination on this topic. So I am continuing this one. So just look at the same example that we were seeing in one of our earlier classes. I am sharing the screen, showing some transactions in which cash book and passbook will be prepared, and then we will see why the balance differs of both the books and how do we make the bank reconciliation statement. I am sharing the screen. The screen has been shared, I think. Let's have a look at some transaction. The first transaction says Mr. Samir opened a current account in Punjab National Bank. So what journal entry will he pass? Or whether he will pass an entry in the journal book or in the cash book. If he is preparing a cash book, if he is keeping subsidiary books, cash book is also known as subsidiary book, then this transaction will be recorded by him in the cash book. Otherwise, in the journal. If the business is a small one, this transaction will be recorded in the journal. But since we are learning bank reconciliation statement, so we will assume that Mr. Samir is maintaining a cash book with bank column. We are considering a cash book with bank column only because we are trying to learn the bank reconciliation statement. So cash column of the cash book is irrelevant in this case. We shall not talk about that cash column. So when Mr. Samir opened a bank account in Punjab National Bank, he will record it in his cash book on the debit side. On the debit side to cash, and the amount will be 20,000. And now this transaction was being recorded from the point of view of Samir. In Samir's business, the cash has gone out by rupees 20,000 and bank is the receiver. So in the cash book, in the bank column, bank is the receiver, bank has been debited. On the debit side, this transaction has been recorded. And similarly, just think about the bank. The bank will also record this transaction. Suppose when A sells goods to B or A pays some money to B, then both are businessmen. Both the person are going to record the transaction in their respective books of account. If A is paying the cash, then for him, B is the receiver of cash. And if we look at the transaction from the point of B, from the point of view of B, then for B, A is the giver of money. He is receiving cash. So in this transaction, Mr. Samir gave 20,000 to the bank to open the account. So he debited the bank account, the bank column in the cash book. But how will the bank record this transaction in its books? Bank will open Samir's account in his books of account, Samir account. And this will be recorded on the credit side. This transaction will be recorded in the credit side. And why on the credit side? So there is a simple reason. Because for the bank, for the Punjab National Bank, Samir account, Samir being a person, a personal account, is giving money to the bank. So Samir is the giver. And according to the rules of generalizing, if a person is the giver, then his account is always credited. Second transaction. On Jan 5, 7,000 was paid to Mr. Manoj by check. Who paid the money? Mr. Samir issued a check in favor of Manoj. And what will Manoj do? Manoj will take this check to the Punjab National Bank, and Punjab National Bank will pay cash to him or credit the amount to his account. So in this transaction, if we look at this transaction from the Samir's point of view, then bank is the giver for him. Samir's bank is paying money to Manoj. So bank is the giver. This will be recorded in the cash book on the right hand side by Manoj's account, and the amount will be 7,000. And as far as the bank is concerned, bank will debit the Samir's account. So here is the entry to check number 7,000. Because for the bank, Samir is the receiver of money. On his behalf, on behalf of Samir, bank has given money to Manoj. But bank is not going to debit or credit the Manoj's account. Bank will debit Samir's account. So these were two transactions. Then again, third transaction is sold goods for cash, 12,000 and deposited into the bank. I am quickly going through these transactions because I assume that you already know how the cash book and passbook is prepared. So when goods are sold for cash, 12,000 and deposited into the bank is the receiver. In the cash book bank column, it will be recorded on the debit side, and in the passbook on the credit side. Next, on Jan 10, received a check of rupees 15,000 from Mr. Pramod. So it will be recorded on the debit side of cash book, and bank will record it on the credit side. Next one, purchased goods and paid by check. So paid by check means bank will pay the money to that person to whom we have given a check. So bank is the giver for Samir. It will be recorded on the credit side of cash book, and bank will debit Samir's account by rupees 8,000. Next transaction, paid rent by check. This will be recorded on the credit side of cash book by rent, and on the debit side of Samir account in the Punjab National's book, Punjab National Bank's book. On Jan 20, bank charges rupees 650 charges. It's an expense for us. So bank charges will be recorded on the credit side of cash book, 650, and bank is going to debit the Samir's account by rupees 650. Again, bank paid insurance premium 2,700 under standing instruction. We have already previously instructed our bank to pay up the insurance premium when the due date comes. So bank has paid rupees 2,700 without informing us on the due date. However, since we already know that the due date of the insurance premium has come, we know about this transaction, we will record it on the credit side. Buy insurance 2,700, and bank will debit the Samir's account by rupees 2,700. Next, paid salaries by check, rupees 9,000. So being an expense will be recorded on the credit side, and again, bank will pay the money to our staff when our staff takes the check to the bank, and the bank has given this money to our staff on our behalf, on Samir's behalf. Samir's account will be debited in his books of account. The last date of the month, Jan 31, bank credited Samir's account by rupees 2,310 for interest. This transaction says bank credited Samir's account. Bank is crediting the Samir's account. So Samir will obviously debit bank account. So on the debit side, to interest, to bank interest actually, 2310, and in the passbook, in Samir's account, it will be recorded on the credit side. So now, so all the transactions are over. And why did I show you all these transactions being recorded one by one in the bank's book and Samir's book? Because there is an important reason. Just look at all the transactions here on the screen. An important point here is that all the transactions that have been recorded on the debit side of cash book have also been recorded on the credit side of Samir's account. The debit side of the cash book, this side, is similar to the credit side of this Samir's account. This is an important point or a fact you must remember while attempting the questions relating to bank reconciliation statement. Anything, don't look at this transaction, anything. If it is being recorded on the debit side of cash book, then it will surely be recorded on the credit side of the passbook. This Samir's account is nothing but the passbook of Samir. And similarly, all the transactions that have been recorded on the credit side, this credit side of cash book, are appearing on the debit side of the passbook, debit side of the Samir account. This is an important point, observation, which must be kept in mind while preparing bank reconciliation statement. So what is happening when we record all the transaction in the cash book and also in the Samir's account? The balance of both the accounts will definitely be same, because the same transactions have been recorded by both the party. The transactions that have been recorded are same, but on the opposite side. So the balance will be shown by both the accounts, or say book, cash book and passbook, will be equal. Look at the balancing. Look at the credit side of cash book. It will have a balance of rupees 11,460. The debit side of the cash book will be added, and everything written on the credit side will be deducted, and we will get a balance of rupees 11,460, positive balance in our cash book. Similarly, in the passbook also, the balance CD will be 11,460, but on the opposite side. These two balances will be same. So why that there is no difference? What is the reason that there is no difference between the balance shown by cash book and passbook? And if the balance are same, there is no need, you need not prepare the bank reconciliation statement. Bank reconciliation statement comes into existence only in a situation when there is some difference in the balances. Otherwise, you need not prepare bank reconciliation. So the first important one, why the balance is same, why it is not different? Because everything has been recorded by everyone. All the transactions have been recorded in the cash book, and same, all those transactions have been recorded in the passbook. That's why the balance shown by both the books are same. But suppose some transactions are left out in the cash book debit side or on the cash book credit side. Bank has recorded some transaction, but we have not recorded it. Or suppose we have recorded some transaction either on the debit or on the credit side, but bank did not record those transactions on the opposite side. In that case, the balance will not be same. there will be difference. And to explain the difference, the regions of the difference in these two balances, we prepare bank reconciliation statement. So we will see these two books again, cash book and passbook. This Samir's account is nothing but a passbook. We will see these both the books again, but with some differences. Some transactions missing out in one of the books. Suppose this transaction, the check of rupees 15,000 dated 10th January on the credit side. Look at the transaction. This transaction, buy check rupees 15,000 on the credit side of Samir's account, which was appearing here on the debit side of cash book. This was a check received from Mr. Pramod. 15,000. Suppose this check has not been cleared and the bank has not credited us. This 15,000 is appearing here on the debit side in the cash book, because Mr. Samir has received the check from Mr. Pramod. So he has debited his cash book and Pramod has been credited. But the bank has not yet realized the amount of this check. So bank has not credited the Samir's account yet. Again, look at this transaction. To interest on the debit side of cash book bank column 2310, this transaction. This transaction is here on the debit side and the same one is appearing here on the credit side of passbook, Samir's account. In this case also, suppose bank did not inform us and we don't know anything about this interest, and this entry is not there in the cash book. The entry has gone out. So this entry is appearing only on the credit side of passbook. Once again, look at this transaction. To check number 10,500. This 10,500 was given for rent. And further, suppose that this check was given to someone, but that person kept the check with himself. The landlord to whom we have given the rent by way of a check did not go to the bank and present the check. And in this case, the entry is not there since he has not gone to the bank. Bank has not given him the money. Bank is not going to debit the Samir's account. So the entry is not there on the debit side of Samir's account. Again, the fourth one, bank charges. Bank charges 650. We did not know about these bank charges. Whenever bank debits interest to its customer's account, it does not inform every customer. Whenever bank wishes to debit the customer's account for interest, it will debit all the accounts. It may not inform all the customers. It's not possible. So suppose the bank did not inform us about these bank charges, and this bank charges is not appearing in our cash book. So some of these transactions, now the situation is there are a few transactions which are present in cash book, and there are some other transactions which are present only in passbook. There is another transaction, this 9,000. This 9,000 is also not there in the passbook. It is a similar case like rent. The checks for rent and salaries were given, but both the persons did not go to the bank and take away the money. So these two transactions have been recorded on the credit side of the cash book. But these are not present on the debit side. So now, if we calculate the balance again, it won't match. Previously, the same balance was shown by both the books, 11,460 and 11,460. But now, if you find the new balance, the balance will be different. The balance in the cash book will be 9,800 and balance shown by passbook will be 15,960. Now, since some transactions, 3 transactions colored in red in both the books, these transactions, these red colored transactions are not present in both the books. For example, see this Pramod account. This Pramod account rupees 15,000. This is here on the debit side, but not on the credit side of passbook. This bank charge is 650. It's appearing on the debit side of Samir's account, but this figure is absent here on the credit side. So there is a difference. The difference in both the balances, 9,800 and 15,960. And this is the reason. This happens actually in practical life. Whenever you are having numerous transaction with the bank, the balances shown by your book and the bank's book and the passbook will never match. And for finding out the regions, a statement is prepared to know the regions of differences between the balances shown by these two books. We prepare a statement known as bank reconciliation statement. So now we will prepare bank reconciliation statement for these two books. Just look at the format of the bank reconciliation statement. This is bank reconciliation statement having 2 columns on the right hand side and particulars on the left hand side. We shall start preparing bank reconciliation statement by taking the balance of cash book. The balance of cash book, the balance shown by cash book in our case is 9,800. So first of all, it will be written as balance as per cash book 9,800. And now we will see each and every missing transaction in the other books, and either we will add this transaction, add this amount in the statement, or deduct this amount from this balance 9,800. But we will have to think about it, that which transaction need to be added here and which item need to be deducted in the statement, so that we arrive at this balance. This balance shown 15,960. We are starting this bank reconciliation statement by taking this 9,800. Look at the screen. This 9,800 has been written over here in the bank reconciliation statement. And now we are going to add or deduct figures from this 9,800 and arrive at this 15,960. So we will look at each red color transaction and try to analyze it and ascertain whether we should add this transaction or deduct these transactions. So here we go. Look at this transaction. This entry, 15,000. This entry was present in cash book, but this is not here on the credit side of passbook. So to make these two books similar, the difference is arising because of this red colored entry. this entry is present in cash book, but not in passbook. So you just remove this entry from the debit side to make it similar to the passbook. And the effect of this removal will be, if you remove this 15,000 from the debit side, what will be the impact of this balance? This 9,800. This 9,800 has been written over here in the bank reconciliation statement. So if you remove anything from the debit side, this total of debit side will get decreased, and this 9,800 will also decrease. So now we know that since the balance will get decreased, we will deduct this 15,000 in our bank reconciliation statement. Because if you remove this entry, this balance will get reduced. So here we go. Less check deposited. We will write the reason also. Why this 15,000 is being deducted in the bank reconciliation statement. Check deposited but not cleared. The check was received from Mr. Pramod. We recorded it on the debit side. But this check has not been cleared and bank has not credited. So the reason is that check deposited but not cleared. Again, let's see this transaction. Buy rent. This entry is also not present on the opposite, on the debit side of the passbook. But it is present in cash book. Again, to make these two books similar, making these two books similar means we are trying to arrive at the balance shown by the passbook, but starting the BRS by taking the balance shown by cash book. So we will think about making both the books equal by removing or making the entry. You can also make entry. Instead of removing the entry, you can also pass entry in the books, in the cash book. But the point is, whatever modifications you are going to make, that could be done, that can be done in cash book only. You can't touch passbook. The right to make entries in the passbook rests with bank only. You can't change the passbook. So since we are having red color entries in the cash book, these entries are written over here. These are not present in passbook. We will remove these entries and note the effect of removing these entries on this balance 9,800. If removal of these entries has the effect of increasing this balance 9,800, then we will add it in the bank reconciliation statement. And if the removal of these entries reduces this balance 9,800, which was the case in this transaction, Pramod's check. When we removed this 15,000 from the debit side, the balance got reduced. So this amount has been deducted here. Less check deposited. But these two transactions, when we remove these two transactions from the credit side of passbook, this 9,800 will get increased. Will be increased. So these two things, rent and salary, both these amount will be added in the bank reconciliation statement. Here is the addition. Add check issued but not presented for payment to the bank. So we are over with the three entries, three red colored entries that were present in cash book, but not in passbook, not in Samir's account. Now we will look at these two entries, two bank charges and buy interest. We have to make entries in the bank reconciliation statement for these two items also, bank charges and interest. In the case of our books, that is cash book, the extra entry present which were not found in the passbook were removed. But in the case of passbook, in this passbook, we can't remove the entry. So we have got another way of making these two books similar. If you can remove this interest entry, this entry of interest from passbook, both the books will become similar as far as this interest is concerned. But you can't remove this interest from the credit side of passbook. So another way is just write this interest, record this interest on the debit side of cashbook. If you record this interest on the debit side of cashbook, then both the book will become similar as regard this item interest. So the point is that we are trying to make both the books similar. And what is the technique? That either you are going to record some entries or remove some entries. Which entries will be removed? The entries which were present in the cash book but not in passbook will be removed. And the entries which were in passbook, those entries cannot be removed from the passbook. Instead, we will pass those entries in the cash book also to make these two books similar. So if we write this interest on the debit side of cash book, what will be the effect? What will be the impact on this amount, 9,080? The effect of removing this entry, this check of Mr. Pramod, the effect of removing this entry was that the balance was decreasing. But if you make one entry on the debit side, then this balance will increase. So this 2310 will be added in the bank reconciliation. And these bank charges, due to similar logic, due to similar reason, this bank charges is appearing on the debit side of passbook but not present in the credit side of cash book. So to make it similar, we will write bank charges here on the credit side of cash book. And the effect will be, if we write something on the credit side, then this balance, the balance shown by cash book, will reduce. So this bank charges amount 650 will be deducted in this statement, will be less, and this item interest 2310 will be added. So here we go. This 650, it will be deducted in the bank reconciliation statement, and this 2310 will be added in the bank reconciliation statement. And now, after totaling the inner column, the balance will be taken here, 21,810. This will be added to the 9,800. The figure is 31610. And we deduct 15,650 from this amount, we get 15,960. This 15,960 is the balance shown by passbook. So we started preparing bank reconciliation statement by taking the balance as per cash book. That is 9,800. And analyze the transactions as to which transactions are present in passbook and which transactions are present in cash book only and which transactions are present in passbook only. The transactions which are appearing in both the books will have no impact in the bank reconciliation statement because the difference is arising. The difference in the balances is arising due to the absence of a transaction at one place. When we were preparing the cash book and passbook, we saw that each and every transaction is getting recorded in both the books at two places. And the balance was similar, was same. But if a particular transaction is not present at one place, is appearing at one place in the cash book, but not in passbook, in the passbook, but not in cash book, in that case, the balance will never be same, and we need to prepare a bank reconciliation statement. So this was the bank reconciliation topic. And there can be 4 different kinds of question asked in your examination regarding this topic. We solved this question by taking the balance, this balance 9,800 at the starting as the starting point. We started the bank reconciliation statement by taking this balance 9,800. We can also prepare this bank reconciliation statement by taking this balance 15,960 at the top. The examination question generally says that prepare bank reconciliation statement when the starting point is cash book balance. It can also say when the starting point is the passbook balance. So just think about it. If this question says us, require us to start the BRAs by taking the balance of passbook, then what will happen? Just reverse everything. This 15,960 will be written at the top. The items that have been deducted here will be added. And the items that have been added in the BRS will get deducted. And we can arrive at this 9,800. This 15,960 is the balance. This we will add this 15,650. Then we will get 31,610. And when we deduct this 21,810 from this 31,610, we will get this amount. So this bank reconciliation can be prepared in either of the two ways. By taking cash book balance as the starting point or passbook balance as the starting point. So these were two varieties. But there are two other varieties also. And those two other varieties relate to the overdraft, the negative balance. Suppose your balance CD, in this case, in our example here, we were having this positive balance, 9,800. This was the positive balance. We were having funds in our bank account. But it can happen that your payment side is greater. The total of this credit side is more than the debit side. In that case, balance will be written over here to balance CD. This balance is known as credit balance as per cash book, and it is also known as, there are two other names also. If the balance is on here to balance CD on the debit side, then this balance is also known as unfavorable balance as per cash book, and one another name is overdraft as per cash book. This will be the third variety of bank reconciliation. And if we start by taking the balance of passbook, which will obviously be present here, this balance, if the cash book is showing balance on the debit side to balance CD, then obviously passbook will show balance on the credit side. And you can start those questions, solving those questions by taking this balance on the credit side of passbook, which will become fourth variety of bank reconciliation statement. So there can be 4 types of questions on this topic. Some questions have been asked in your past examination. I went through your past year's examination questions. There were certain questions on bank reconciliation, this topic. And this topic is generally considered confusing by the students. So you can solve some questions of this topic. And if there any doubt arises, you can ask me. In the next class, I will show you some objective questions also. I will show you some objective questions of BRS. You are going to have subjective and objective MCQs, both the type of questions. Your paper 4 consists of 50 marks subjective question. And also there is 100 marks paper. Am I right? There is 100 marks paper containing MCQs only. Can you hear me? Am I audible?
Yes, sir, audible. Audible.
Try out some questions of bank reconciliation statement. And if you find any difficulty, write me. Give me message. Just leave some message in my WhatsApp number. I will explain in the next class. If you are having the questions to solve on this topic, then it's okay. Otherwise, I may share some questions to solve by you. Whatever you say, I will do that. Okay? So
Okay,
that was all for today's class. We will again continue on Monday. On Monday, I will show you all the 4 varieties of questions and also share some MCQs that were set in your past examinations. We will discuss about those things. So thank you. Good night for today.
Good night, sir. Sir, last class adjustment classes, that video, sir, kindly share.
Yeah. I could not share that video. Actually, I got busy and could not share the video tomorrow. Tomorrow, I will definitely share both the video of this bank reconciliation and final account adjustment. Okay, that's a promise. Okay.
Okay.
So thank you. Good night. Take care. I'm ending the session.